Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday, 10th October 2025, and joining Lee to pose some questions on the financial market themes for the week ahead is Abdul-Ahad Lockhart, Currency Analyst. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Hi, Lee.
Hi, Abdul-Ahad.
So the yen has weakened sharply after last week's LDP leadership election. Do you expect yen weakness to continue?
Yeah, like you said, we have seen a big move higher in dollar yen over the past week, with dollar yen rising briefly above the 153 level. To us, that reflects kind of initial kind of expectations amongst market participants that Takaichi, as the leader of the LDP, will likely try to push for looser fiscal policy and potentially as well putting more pressure on BOJ to maintain looser monetary policy as well, and that is having a negative impact on the yen. Having said that, though, obviously we've had some additional uncertainty at the end of this week with the Komeito party dropping out of the coalition government. So it's not a done deal that Takaichi, even though she won the LDP leadership election, it's not a done deal yet that she will be get enough votes to become the next prime minister of Japan. So that's an extra level of political uncertainty, which is likely to persist in the week ahead. Obviously, there are potential implications in terms of the LDP's policies going forward. If Takaichi doesn't become prime minister, then that could certainly limit the room for the LDP party to push through looser fiscal policy and put pressure on the BOJ. So that could be something which then helps to support the yen. But on the other hand, you could also argue that in order for Takaichi and the LDP party to remain in power, they would have to maybe offer some offerings to other opposition parties, potentially offers to loosen fiscal policy. And now that in itself could make the fiscal situation worse in Japan, which would be more of a negative for the yen. So I think in this kind of very uncertain environment, I think in the near term, we still feel that the risks are more weighted to the downside for the yen until we have more clarity. Having said that, though, obviously one development which has also got attention at the end of this week is also the fact that policymakers in Japan are now starting to signal more concern over the kind of rapid sell-off that we've seen in the yen over the past week. And if that was to continue next week, that could certainly start to prompt a reassessment of BOJ policy expectations as we head into the October policy meeting. Certainly, if the yen was to weaken further from here and go and see dollar yen moving up towards the year-to-date highs, then pressure could build on the BOJ to sound more hawkish at the October meeting, and you couldn't even rule out the possibility of a rate hike if they really wanted to try to support the yen.
Okay, so bringing it a little bit closer to us, political risks have been in focus in Europe as well for French Prime Minister Le Pen regained. What has been the impact for your outlook for the euro?
Yeah, like you said, we saw Prime Minister resign at the start of this week, and that did trigger a sell-off initially in the French government bond market, and has contributed to the euro underperforming this week against other major currencies. Like we're currently testing important support levels for euro dollar here between 115 and 116. Whether that's broken could depend certainly on the political developments in the week ahead. We are waiting to see who President Macron will announce to be the next prime minister later today. And then the market will be watching closely next week to see if that new prime minister is able to reach a compromise with other parties to try and pass through at least a provisional plan for the budget for next year. If that new prime minister is more successful than Le Cornu, that would then help to stabilize the euro, we think. Certainly, if that new prime minister was to offer more concessions in terms of scaling back plans for fiscal tightening next year, that could secure more support from opposition parties to be able to get that provisional budget plan in place. So in that scenario, I think that would help the euro to stabilize and then potentially recover and rebound heading into year end against the dollar. Whereas perhaps the more disruptive outcome for the euro would be if we were to see those attempts fail for the next prime minister to reach some form of compromise deal. If that was the case, you'd have to argue at that point in time that it would become harder and harder for President Macron to avoid having to call fresh snap elections in France before the end of this year. And obviously, if we did go down that path, that would lead to political uncertainty in France continuing for longer. So it could certainly see euro dollar kind of breaking through this kind of 115, 116 level going into year end. The other thing that we have seen happen as well this week in markets alongside these political risks in France and Japan has been the surge higher in the price of gold. This week we did see that rising above $4,000 per ounce. And I know, Abdul-Ahad, you have been looking back in history at periods where we've seen similar price action. And what did you find in terms of FX market reaction during those periods of rising gold prices?
Yeah, thanks, Lee. So like you said, gold is up 50% year to date, outperforming Bitcoin and AI stocks. And so this week we took a look at how G10 currencies have behaved in different gold and market environments, specifically through the lens of inflation-adjusted gold, or what we call real gold. So we break the analysis into two key regimes: momentum regime, where we look at how gold has trended over the past 50 years, capturing the oil price shock in the 1970s, global financial crisis, and the COVID recession. And we identified three different price momentum regimes: bullish, neutral, and bearish. So right now, the price of gold is in a bullish momentum regime, with real gold rising steadily since June 2024, driven by geopolitical tensions, central bank gold buying, and rate cut expectations. We have found that in bullish price regimes, safe haven currencies like Swissy, Euro, and Yen tend to outperform the dollar. On the flip side, commodity currencies like Aussie dollar, Kiwi, and CAD have lagged. So taking a look at the volatility regime, we also assess how volatile gold has been over the year. We define different volatility regimes such as high, mid, and low. Currently, we're in a low volatility regime, meaning gold's monthly returns have been relatively stable. This is unusual for a strong gold rally and reinforces the idea that macro uncertainty, not market panic, is driving flows. So just some key takeaways. The current bullish plus low volatility setup favors defensive currencies like the Swissy, and commodity FX, Aussie dollar, Kiwi, CAD is underperforming, highlighting the non-commodity nature of this gold rally.
Great, good insights, Abdul-Ahad, and thanks everybody for listening today.
Thank you for listening to this MUFG Global Markets podcast. Rate, review, and subscribe. Contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.